we're really now only just starting to see really strong investor flows into the sector.
I can see the trajectory in the global growth and perception and sentiment becoming more and more positive. So it does mean that we get very excited about the mining sector in the coming years.
Uncertainty and volatility is created by this very cheap, cash is trash environment, and people are charging into various sectors.
I am confident that in my lifetime, certainly in my child's lifetime, that mining companies will trade at 40 times EBITDA, not at 4.
Well, hello and welcome to One-to-One Mining Investment APAC. This is the first of our live webinar sessions, and today we have a commodity outlook panel. We've got a lineup of fantastic experts to take us through all the different metals, minerals you might be looking into at the moment to talk about which ones are going to benefit from the recovery, the post-COVID recovery. Before we get started, I just want to remind everybody that the meeting planner for the upcoming One-to-One Mining Investment APAC conference is going live today. So if you have already registered, you will be receiving your logins today. Please log into the planner, have a look at the 75 mining companies we have lined up for you there, and pick some meetings. If you haven't registered, if you're an investor and you would like to register for the event, please go to the event website and hit the registration button. To find the event website, the best thing to do is to type One-to-One Mining Investment APAC into Google and let the search engine take the strain. In today's webinar, you have the chance to put questions to our panelists. At the bottom of your screen, you will see a Q&A button. Just press the Q&A button and type your question into the box. And you will be able to, we'll be looking at the questions and I'll put them to the panelists as and when they come in. So without any further ado, I'd like to introduce you to our panelists for this session. We have John Forwood, who is the Chief Investment Officer of Lowell Resources Fund Management. He's based down in Melbourne. We have Daniel Hynes, who is Senior Commodities Strategist at ANZ, joining us today from Sydney. We have Warren Gilman, who is the founder, chairman and CEO of Queen's Road Capital, based here in Hong Kong, and Jason Chang, who is the CEO and managing director of EMR Capital, also, I believe, in Hong Kong. Gentlemen, welcome today. Thank you for joining us. Now, it goes without saying that it's been an interesting year. Very difficult year for many. We're now looking sort of towards the recovery, and we're all intrigued to know what's going to happen in the metals and mining space. To start things off, I want you to, each of you, if you can sort of give me your thoughts on where do you see COVID as having had the biggest impact on the supply side? Which metals have been impacted the most on the supply side? Daniel, as a commodity strategist there at ANZ, let's start with you. What's your thoughts on that?
Yeah, I mean, it's been actually quite a mix of impacts across the globe. I mean, naturally, you look at where I suppose the cases have been the greatest, and clearly the restrictions have made quite an impact on mobility in those countries, and certainly that was the case in South America. We saw obviously Brazil become quite a large hotspot as a result of the outbreaks there, and certainly the reluctance by the government there to really stamp out the virus, or at least try to contain it, resulted in it spreading quite quickly. So certainly the impact within that continent itself was quite large, and we saw issues with Vale's iron ore operations in particular. What was interesting was, it was more around the impact it was having on its ability to conduct, safety checks and reviews on a lot of its dam operations, which, as we know, were closed down nearly two years ago after that horrific dam disaster. So, that had an impact on their operations. Certainly in the west of the continent there, through Peru and Chile in particular, we saw sporadic but continuous sort of outbreaks through a lot of the countries, a lot of the mining regions there, and that certainly weighed on copper supply as well. And we've seen, I think just recently, data released showing Peruvian copper output fell, I think about 7% last year, and still down in December as opposed to the year before. So, that's had a material impact, and we've seen, as a result, copper concentrate treatment charges, fall quite dramatically. Premiums in China, where obviously a lot of that concentrating going is being quite strong. So, that seems to have taken the brunt of the impact, but I don't think there was any commodity that really was spared within this pandemic.
I mean, to what extent do you think that the impact on these mining operations, it's sort of shown the governments of some of those countries just how important the mining industry is to their economies? And is it true to say that we've now seen almost like where there has been an impact, the governments have actually sort of designated the mining companies as sort of essential industries? And in the long run, is this going to be more sort of encouraging for the mining industries in those countries? I know places like Brazil, for example, have said, okay, mining is an essential industry.
Yeah, I think so. I mean, certainly, Chile, for example, has always, placed a pretty big importance on that sector. But other countries within that area probably haven't, put it, right near the top. And you're right to sort of sound out Brazil as one issue. It's obviously got a slightly more diverse economy, but the impact of those issues on the mining industry certainly raised the importance of it for the government. So I think longer term it does solidify the industry within those economies as being critical industries, and that hopefully will lead to better investment into the sector, or at least more support for it from governments with policies which potentially ease the red tape and allow investment to grow.
John, you obviously look at the sort of smaller exploration development companies around the world. Where have you seen COVID impacting the development of new projects?
Look, it's an interesting question, Leo, and I think there has been an obvious impact on COVID on travel and the ability for companies to move into new projects which aren't located in areas where they've got a team on the ground. Deals are still getting done, but moving those projects ahead, if you haven't got access to an existing team, is pretty tough. So, M&A, I think, has been impacted. Companies that are looking, junior companies that might be looking to get a major in as a joint venture partner. I'm hearing a lot of those companies are, having to park their joint venture discussions, even well into 2021 as a result. I think, it's interesting to see the contrast between a place like Australia, which, fortunately the mining industry really was, if you like, prioritised and not subject to major impacts of COVID, versus a place like South Africa, which has been hit very hard by COVID. And one of them, South Africa is one of the major producers of platinum group metals. And platinum group metals have suffered platinum and palladium suffered a major supply deficit in 2020 and also going into 2021. Just as a result of South Africa being a major supplier of those metals, but B, hit very hard by COVID.
Jason, your company EMR Capital, you run a number of sort of mines around the world, focusing on copper, as been mentioned already, coal and gold. How have your operations been impacted? Have you been able to keep things going?
Yeah, and one of the takeaways from this whole experience with COVID, and obviously we haven't seen the end of it yet, is the mining sector, generally speaking, actually has held up quite well around the world, with some exceptions, as John and Daniel pointed out. But if you look at Australia, it's been terrific. Real, gold standard, I think, when you think about health and safety. Mining hasn't stopped, generally speaking. There hasn't really been material disruptions in general. I'm generalizing a bit, but I think that one of the lessons is the mining sector has a lot to offer. I think when you think about processes, governance, health, safety, that's the first point I wanted to make. And it's really a terrific, example of how mining can contribute. Our operations, we operate currently, we've got 9 major operations in 6 countries. Australia is the bulk of it. Then we have a copper mine in Zambia, and then we've got a project in Spain, a project in UK, Chile, Utah. I think in general it's held up very, very well. And even in UK and US, where obviously COVID has been quite severe, we really haven't had any material disruptions. We haven't stopped production. So we've been very, very fortunate. I mean, it's very, very interesting. Australia's, like I said, gold standard. We've got 4 operations, 3 in Queensland, 1 in WA. Haven't missed a beat, I should say. We've met budget, we've met production across those operations. We've had very few infections even in Australia at all. And in Zambia, we had a few, but not too many. I mean, I'm quite surprised and very, very pleasantly surprised, of course. And I should say, 1 infection is 1 too many, of course, but surprisingly, the Zambians actually coped pretty well. And that could be attributed to a lot of reasons not yet known to us. Might be because in general, in Zambia and many parts of Africa, you have to take lots of different vaccinations anyway. It seems that could actually be one of the reasons why it's been quite well contained in some of those countries, not all, but certainly Zambia, we are quite pleased. But Spain, obviously, the COVID situation very severe, as is UK. But again, there our projects actually have been progressing, I should say. I think the restrictions, from being able to work effectively has been a major issue. Obviously, in mining, we have to liaise with all sorts of government departments, and the sort of restrictions that's been imposed have slowed things down. Look, over time, I think it does mean it will be a bit more expensive to do things in mining, because you have to have lots of processes at site, at corporate, everywhere. But health and safety seems to be holding up, at least in our operations, quite well. We're all very anxious. We're on high alert. But so far, so good. I should say, you talk about supply. I think even pre-COVID, supply, on things like copper has been difficult. And to Daniel's point, certainly copper is, you would see as one of the more impacted commodities, and hence, we're seeing a rebound in all those commodity prices. But overall, Leo, I think, we are, very fortunate. I think generally been held up quite well, but certainly I think as John and Daniel pointed out, there are lots of examples where, there have been quite material disruptions, and hopefully, that all will recover. But it means that, supply gets harder. Demand, I think you can see the market's pricing in the vaccine will work, and I can see the trajectory in the global growth and perception and sentiment becoming more and more positive. So it does mean that we get very excited about the mining sector in the coming years.
Absolutely. I mean, after sort of 8 to 10 years of sort of historic underinvestment in new developments, plus this sort of pandemic coming in at the end to really squeeze the supply side. Warren, is the mining industry, do you think, lining up for a big bull run?
Well, Leo, let me have a kick at the can for your first question, and then I'll talk about the great bull run of the next decade, because I do think we're in store for a great bull run. But two commodities that I think deserve special mention in terms of the impact of COVID. One is uranium. Obviously, we had Kazatomprom cut back production. And we had the world's largest uranium mine shut down, not once, but twice, and remain shut down because of COVID. So in terms of impacting a commodity that was in significant mine supply deficit, even going into COVID, we have to give a special shout out to uranium. Now, that is all temporary. It will eventually get adjusted. The one where it's a lot less temporary is gold. Gold, because of the extraordinary stress on global balance sheets going forward and government deficits, my view of the future for gold changed 180 degrees pre-COVID and post-COVID. And obviously that has virtually nothing to do with mine supply, unlike the other discussions we're talking about copper and so on being supply disrupted temporarily because of COVID. I think the impact on gold for the next several years from COVID is much more long lasting. My home country, Canada, when you go from a country that is used to having annual government deficits of 10, 20, anything more than 20 billion a year was viewed as massive deficits. And now we're talking $500 billion in a given year. That has got to undermine your confidence in currencies and government finances. And that's going to take a long time to address. So that's a longer term implication of COVID. Now, to get back to your more uplifting question about the great bull run of the next decade. Yeah, and for a lot of the reasons that have come into the fore as a result of COVID, the lack of investment in the sector, not for the last couple of years, but for the last 15 years. Increasing demand, but no investment in either exploration or development. It should be an extraordinary time. And now, given the fact that we're going into our second year of pent up demand, people wanting to do things, but not having the ability to get out there and do them, demand is just going to skyrocket once we all get back to our normal ways of life. So I think it's going to be a great period to be in the mining business. And there isn't a more deserving group of people on planet Earth that deserve a bull run than mining investors. So let's all just sit back and enjoy this blessing.
Fantastic. I mean, John, you as I mentioned earlier, you invest in sort of explorers and developers. I mean, you're going to be at the sort of the cutting edge of this boom where the money needs to be put into these new projects to meet this supply side. As the sort of post-COVID recovery unfolds, which sectors do you think are going to be which commodities do you think are going to be the winners?
Look, firstly, I'd say, Leo, the thing that has happened in the last year is uncertainty is increased, and predicting anything, let alone the future, is much harder than it's ever been. So who would have picked that from March last year iron ore prices would be at $150 a ton? That's remarkable to me. But I think the underlying drivers of particular sectors are very broad. One big one is obviously Chinese demand, which has rebounded remarkably across a lot of commodities. And the other one, which I think is even broader, is the low interest rate environment. So that is pushing speculation. I think speculation is absolutely rife, as we saw last week with GameStop, and then, silver was up, one day and then down the next. So, uncertainty and volatility is created by this very cheap, cash is trash environment, and people are charging into various sectors. So it is particularly hard to pick a sector. I would echo what Warren said about uranium. That's a really interesting market at the moment. A number of uranium stocks have already, junior uranium stocks have already taken off. It is a bifurcated market in that you look at the spot price, but really the more important volumes are traded on long-term contracts, and there's a big difference between those. But we're seeing junior equities take off in uranium well ahead of any spot price movement. The spot price is actually down slightly over the last month or two, but the fundamentals of uranium continue or get better and better as time goes along. So I think that is one sector which we can see a very sudden spike in. And I think it's even more so the case at the moment that the trend is your friend. So, gold price is off, say 10% from its, US dollar highs in August last year. And that modest sort of correction has resulted in, a lot of gold stocks retracing more than 50% in our observation. So that's a trend that gets exacerbated and followed by equity investors. On the other side, you see silver jump 10% in a day, and silver stocks, a lot of them jumped 50 to 100% that same day. So I think it's more the direction of a particular commodity that's catching the market's eye, rather than which will out in the long term, the fundamentals and the long-term price.
We've got a question from the audience here. He's asking about coal and iron ore. I mean, he's asking about oil and gas as well. I think we can. Probably coal and iron ore we should focus on mainly. You mentioned, John, China, obviously very important in this recent sort of upswing, or the upcoming upswing. And coal and iron ore has been an interesting story this last year. And Daniel, I think you probably got something on that as well.
Yeah, I mean, from my perspective, as it's been already mentioned, the rally in iron ore has been quite phenomenal and certainly exceeded my expectations. But it's been driven by fundamental issues. I mean, obviously the supply side has played its part, but certainly Chinese stimulus measures, focusing on infrastructure and property, have rebounded quite strongly and continue to surge higher, and that's really been the crux of it. The Chinese focusing on those domestic sectors as a way of buffeting, at least last year, the weakness in developed markets, where we saw obviously Europe and the US fall back into a second or third wave of the pandemic, and thus restrictions there. So the Chinese focus was quite central to the rally that we've seen in those markets. And look, it looks like holding up relatively well, although there are some warning signs of it starting to abate a little bit. China did sort of signal, it's looking to sort of tighten up, credit as a result of some of the bubbles emerging, in the property sector there. House price growth has been very strong, and so they're again, being worried about what that could mean for the stability of the industry, and certainly the high debt levels of developers there have resulted in some restrictions coming into place. So things may be sort of stabilising there, but then we're going to see the rest of the world recover subsequently. So 2021 looks pretty positive on that side. And then you throw into that, the geopolitical issues. Obviously China banning the import of coal from Australia has quite dramatic impacts on trade flows, and that's really seen blowouts in sort of regional spreads in pricing, particularly on the coal side. Record high coking coal and thermal coal prices in China, domestic ones, as opposed to relatively weak international ones, and that is going to have issues for Chinese consumers, having to pay those exorbitant prices there. So, there's a lot going on in that market, and it's still to play out.
I mean, have governments now sort of possibly learned their lesson that tariffs and trade wars don't work? I mean, Trump obviously caused some issues for American manufacturing by putting tariffs on imports of certain sort of parts and things like that, and China obviously has pushed up the cost of coal by banning imports from one of its major suppliers.
I don't hold out much hope that governments have learnt their lesson. We've seen this time and time again. Whenever they get involved in a global commodity market, things never turn out well, and those political instincts tend to override, I suppose, the economic issues. So I don't hold out much hope, particularly the feeling, even with, I suppose, Trump exiting the White House and Biden coming in, I still get a sense that there is still a lot of protectionism being put up with policies by various governments. So for them, particularly coming out of this pandemic, looking to protect their own industries, I'm suspecting we're going to continue to see tariffs and the like, and the general policies really skewed towards boosting their own industries rather than looking at the global marketplace.
We've got a question here about minor minerals and industrial minerals. Any of our panelists have any thoughts about that? Warren, I know you're a fan of niobium. In terms of those sort of more sort of niche minerals, where are we possibly going to see some winners?
Yeah, you're quite right, Leo. I'm always a fan of what I call the funny metals, non-LME exchange traded metals, because they're always potentially a source of great investments, simply because no one really understands them, and so there's an arbitrage there between consensus, general public knowledge base, and the actual facts of the matter. So they open up an opportunity for investment, both on a private basis and several occasions public opportunities. I don't know if it's relevant to the theme of COVID. The story behind each one of those metals, and including industrial minerals as well as the funny metals, but probably more along the theme of decarbonization, which is probably a topic that you're going to grow into as a result of this panel, because COVID, in many respects, at least from the market's perspective, is now behind us, but decarbonization is in front of us. So in terms of anticipating, looking through the windshield rather than in the rear view mirror, in terms of trying to anticipate what we should be putting our money into today, rather than looking at the profits that we've made over the past year. Decarbonization is probably the overriding theme, and decarbonization will obviously have an impact on some of these more esoteric metals and industrial minerals, and we've seen that in some moves already. Perhaps less esoteric, becoming much more mainstream these days, but lithium. Obviously, lithium has had a resurgence. Let's call it lithium stage 2. For all of us who didn't sell our lithium stocks in the last great boom, God has given us an opportunity to hit the bid one more time and realize the profit. And thank goodness for that. So we'll see how long this stage 2 lasts for lithium. But yeah, these are great opportunities, and will be impacted, I think, by decarbonization in the coming years.
Absolutely. I mean, decarbonization obviously is a major theme. It's sort of my next question. And in terms of, you've mentioned lithium there already, and I know that, I mean, when we think about sort of wind turbines and things like that, we think about sort of some high performance steels and things like that, and some of the alloying metals that go into those to make them strong, stop them flying apart when the wind is blowing. Where might there be some winners there? Some of the metals that people maybe haven't really thought about.
Well, you talk about wind turbines, and obviously there's a rare earth component to some of those motors and components. So that's very helpful. It sort of relates to the discussion we had earlier on policy, and we've seen these rather strange policies coming out of China over the last several years, which many times seem to shoot themselves in the foot in terms of costs to the country of importing metals or promoting overseas development. And one of the results of China's last policy on rare earths was the development of overseas deposits. We saw it in the US, we've seen it through Lynas in Australia, et cetera. And I think we're going to see more of that. And you're seeing a resurgence again, just as we've seen in lithium. We're seeing a resurgence in some of those rare earths discussions. And I think there's quite significant upside in that sector still yet to play out. Obviously, these are ones that it's more difficult to consider them investments. I think you tend to think more of them as trade, simply because structurally they're subject to oversupply. And so it's a great thing to trade, but I don't know if you want to own it for 20 years. So you have to keep the context in mind. But I think we've got some clear runway ahead of us in these special areas for the next year or two.
I mean, you mentioned rare earths there. John, when you're looking at, around rare earths, there have been some problems on the sort of processing side of things with sort of some byproducts like thorium and uranium and things like that. When you're looking at a rare earth project for investment, what are you looking for in particular to sort of de-risk it a bit?
Yeah, look, rare earths, are very tricky. The market is dominated by China, and as a result, any company that can get up a non-Chinese based rare earth project is being very heavily supported at the moment. And really, the only company in production is Lynas, and they've got had some excellent share price appreciation. I noticed, just as on a tangent, I noticed there's a question about mineral sands, and we are seeing a number of mineral sand projects or developers look at production of rare earths from their mineral sands deposits from monazite, and that includes one of the world's largest producers, Iluka, now looking to remine some of the stockpiled monazite that it's got in windrows adjacent to its old deposits, and process that monazite to develop rare earths. Look, there are a number of mineral sands companies unlisted which are looking at that process as well. So if we can see a line of sight to solving the processing issues on something like that, and B, making sure that the capital cost of those projects are, is feasible to fund. And we're seeing, significant government assistance from Western governments to develop those projects. So they're probably the two main boxes to tick, the processing and the funding. And I think we're making, a number of companies are making some strong advances on both those fronts.
Jason, I want to bring you in here. In terms of this sort of decarbonisation theme, where is EMR? Is EMR looking to invest in something to benefit from that development?
Yeah, I mean, obviously a very important aspect of all investment strategies today. We're, if we focus on copper and gold at the top of the list, and so we do share Warren's feelings about gold. Thank you, Warren. We are invested in potash, so that's part of the thinking around the sort of ESG and decarbonization. So it will become a more critical element, I think, of investment going forward. If we see that, and I do agree with the sentiment that post-COVID, it's going to be a critical element. So it's something that we are continuing to, review, but certainly copper and gold top of list, and I think that will continue to do extremely well.
And obviously, copper has a major part to play in ongoing sort of decarbonisation in terms of electrification and sort of new energy sources and things like that.
Yeah, very much so, Leo. And I think of the 9 operations that we are managing around the world, 4 of them are very copper specific. So we continue to look for it, but as you know, it's very difficult. They're very rare to have a high-grade copper ore body. And fortunately, we're in Australia, and given this COVID environment, I think it's a good place to be looking for copper and gold and lots of other things. But so that's a key focus. And then we like copper fundamentally because obviously there's not a lot of substitute for copper. It's got multi-use. It's very versatile, and supply is increasingly difficult. Even pre-COVID, it's so difficult to get from ground zero to a producing copper mine in any place in the world. So that's going to be an increasing, I think, theme going forward for sure. There's no doubt about that.
Absolutely. We have a question on tin and tantalum. Anyone got any thoughts on the outlook for those metals?
Well, I'll just jump in with respect to tin. I mean, tin looks like it's a great place to be at the moment. Again, it's one of those markets that is historically perennially oversupplied from new, fresh sources. Whether it's new mines coming in, and Southeast Asia seems to be just a constant surprise of new sources of tin. China as well, whether it's illegal smuggling or legal channels, or who knows what country is actually producing it, but it does seem to come out of the woodwork when you don't want it to come out of the woodwork. But right now, it seems to be going into a period of obviously very good demand and a potentially temporary abatement in supply. So we're having a good run. So again, great place to be, enjoy it, but I don't know if it's a place you want to be for a long time.
Daniel, is tin or tantalum anything metals that you cover?
Yeah, no, I've been involved in the tin market, for quite a while, and certainly, share the view that it's a pretty volatile market, and clearly because of its size, it does tend to spike and rally and then get sold off pretty quickly. So it's always been hard one to sort of play on an investment thesis. But yeah, look, demand's been strong. I mean, the demand for solder in particular, driven by demand in consumer electronic items and the like, is really booming. But I do think prices have been, significantly below sort of that economic level for some time now. And maybe, just maybe, this cycle will see prices have to lift sustainably up to a higher level to really induce that longer term supply into the market, because it does the demand dynamics do look quite positive.
I mean, talking of higher prices, we've currently got copper at about $8,000 a ton. Is that sustainable in the long run, or is this just the beginning?
Oh no, absolutely. I think we could definitely see a lot more upside. I mean, the market, as the speakers have talked about, is an extremely difficult one to find quality assets in. So it's not just been the pandemic which has caused issues. I mean, finding quality projects is just very, very difficult these days. And if you do, they're deep underground and cost a lot of money. So if this market wants to lead and become an integral part of the electrification of the world as we decarbonise, then there's going to have to be a lot more projects and supply come online. So I think prices in that sense sometimes can sort of decouple from that incentive level. At $8,000 a tonne, I think probably most operations would be cash flow positive. But as we go forward, there'll just be this increasing level of demand from the industry, and that will drive prices to a point where we probably look a little bit dislocated from those normal levels. But that's what happens in markets which are extremely tight.
Absolutely. We have a question. We've talked a little bit about lithium already, but battery materials in general, nickel, manganese, cobalt. There's been a lot of debate recently about the sort of the battery mix going forward, with some people wanting to sort of take cobalt, sort of squeeze cobalt out of the mix a little bit. What do our panelists feel about who are sort of the winners and losers going forward in the battery materials space? You want to start with that, John? Do you want to kick off?
Sure. Look, nickel is an obvious one. I think if you do the numbers, though, the demand, just from Tesla, if Elon Musk hits his production targets, the demand from Tesla will well and truly outweigh what the current nickel market can supply. And I do worry about that in terms of, if you can't get a metal, then an alternative will be found. So, we're currently seeing a surge in interest in hydrogen. I know that pretty much all major automakers are committed to battery technology, which will involve nickel, manganese, cobalt, graphite batteries. But if they can't get the nickel, they will have to start looking elsewhere and at different technologies. But right now, I think nickel is a bit of a no-brainer. The other elements of batteries perhaps will be thrifted, particularly cobalt. So we in particular are choosing to invest in nickel over those other metals. And I've got to mention that copper, no matter what happens in terms of batteries, copper in the electrification process looks like a fantastic fundamentally. So it's nickel and copper that we really like.
I mean, some of the I think some of the ESG issues will be partly driving, I suppose, the source of those battery materials. I mean, cobalt comes from certainly comes from areas which have dubious sort of underlings, and as such, I think investors who are really driving that ESG theme would certainly be putting pressure on the industry to really shape up. And if they don't, then the source component of batteries will be directed more to markets where we have a clear path from mine to market, which you can prove it's been ethically produced, for example. So, that's, I suppose, where, cobalt's going to struggle, and metals like nickel, are going to benefit.
I mean, if people are worried about the supply of where cobalt comes from, should they be worried about where the supply of some of the copper that's often associated with that cobalt is coming from? Because often it's coming from the same place.
Yeah, no, absolutely. I mean, but it does have obviously that overlay of a large exchange like the LME or NYMEX or Shanghai, to sort of regulate that. So there's a little bit more sort of rigor around it. But I don't think any metal, could put their hand on the heart and say, 100%, of supply is sort of ethically produced, for example, and can certify that. So yeah, I think everyone has to be aware, that there'll be those issues crop up, but certainly one seem to be in a much better position than others.
Yeah,
I mean, my point was sort of that.
My comment on that, we agree with Daniel. I think that's one of the themes. If you talk about ESG, then you think about capital going to the mining sector. The public markets have been up and down a little bit. Private capital is playing a more prominent role, and rightly so, because you do need patient capital for the commodities market. And certainly our investor base, which comes a lot from the US. There's increasing pressure around exactly that, right? In terms of, you do have to watch the geographies in which you invest in, quite rightly so, and it becomes more complicated over time with regulations, sanctions, tariffs. Definitely, that's a theme that we see coming, and that increases the pressure on something like copper and cobalt for sure.
Absolutely. Just before we move on to another topic, I've got a very, very patient questioner who's asked a question about Mozambique. Does anyone have any thoughts about investing in Mozambique or the opportunities? I mean, obviously there's coal is on a bit of a run. A lot of coal comes from Mozambique. John, any thoughts?
Look, only to say, of the hundreds of, groups that we get in to present to us every year, we haven't had a group with a project in Mozambique for a long time. So it does seem to be missing out on, exploration attention in particular. It's certainly a country that is not on our, not in our too hard basket. So we'd be open to investing there. But it does seem to have been a little bit forgotten by, junior mining companies.
Absolutely. Okay, cool. And in terms of one topic I wanted to bring up was silver. This sort of ties in as well to the decarbonisation theme a little bit, but is also quite topical given the recent sort of attempt to squeeze the market on Reddit and everything. What do our panelists think about the outlook for silver, silver mine, silver investment going forward? Panelists, who has any thoughts on silver?
Well, Leo, I'll jump in with my 2 cents. I was a bit disappointed with the whole Reddit impact on silver. Those of us who lived through 1980 recall the Hunt brothers moving it up to $50 an ounce in a matter of days. And they had a lot less money. They were billionaires in the 80s, but they had a lot less money than the Reddit crowd apparently do. So the potential for markets, whether it's fundamentally justified or not, the potential for markets to move silver up to $50. What would $50 inflation adjusted from 1980 be today? $100? The potential to move silver up in a speculative frenzy to $100 is well within grasp. So if the Reddit crowd could only get it up to $30 for 5 minutes, someone's not doing their job. But from an investor perspective, I think the speculative appeal and the fundamental supply-demand appeal for silver is apparent. And again, it's going to be a great place to be. Some pretty unlimited upside and some relatively quite protected downside. So the trade in that regard is, I think biased to the upside. It's a place that people should be.
Do you want to go into a little bit more detail on where you're seeing the key supply side drivers? I mean, solar panels being one of them.
Yeah, just the whole, again, decarbonization and electrification. And that whole sector is going to drive fundamental demand for silver.
And also, I guess there are some people who would say that there's a lot of paper silver out there, and maybe not enough physical silver to cover that. Any thoughts on that?
Well, yeah, the complication of the silver business, unlike a GameStop, is that there are some pretty significant inventories around the world, and there are actually mines out there producing the stuff who can deliver into short positions. There wasn't anyone in GameStop who could deliver a manufactured share into the market to cover a short. So clearly there are arguments for and against the speculative ability to move silver, but I think the speculative potential combined with supply demand fundamentals is a pretty good argument.
Interesting space to watch. Daniel, I mean, yesterday, I believe it was, you put out a piece saying a risk-on tone pushes commodity prices higher. I think our panelists, we've all sort of looking ahead into 2021, a pretty significant, pretty positive outlook for the sector as a whole.
Yeah, I mean, we've talked about the fundamentals of the industry and how, particularly for some of these metals, demand growth is going to be quite strong. I think what will differentiate this cycle will be that investor component. We've seen in previous cycles, flows being a little bit muted, particularly sort of post the financial crisis in 2010. We saw obviously governments implement a lot of stimulus measures then, but they were quite late and misdirected, and investors were relatively low in terms of their overall allocation to this sector. I think now, with that focus on decarbonisation in particular, and all the issues around climate change, they're seeing that sector as a key beneficiary. Certainly the metal side. Maybe the opposite will be the case in energy markets, but certainly that's grabbing the attention, and we're really now only just starting to see really strong investor flows into the sector. And I think what's comforting for me is that actually levels within their portfolios are still relatively low. So we're not expected to see things pull back. The potential for being over allocated will mean that these investors will take their time, and we'll see periods now when things sort of stabilise or potentially even sell off for them to re-enter the market. But I think in general, we're going to see those fundamentals supported by this continued wave of money, which should really magnify in the gains that we see.
And in terms of sort of inflows into the market, John and Jason, obviously, you're talking to, and Warren, you're talking to institutions who might want to be looking to sort of get into the mining space after years of not looking at the mining space. I mean, how is the sort of mood, do you think, from those sort of generalist investors and those pension funds and institutions? What is their attitude towards the mining sector? Is it changing?
Yeah, well, let me kick off. We are seeing an increasing appetite from participants who traditionally haven't been in, real assets, and in particular mining, because mining, unfortunately, is still a bit of a mystery to, a lot of big investors around the world. It's seen as a very technical, very specialist area. So there's a lot of communication and education that's required. But certainly, I think where the world is today, I think to Warren's point earlier on about, the lack of confidence going forward on a number of dimensions, including the USD, I think have certainly accelerated the interest in this space. There's a bit of a time lag, I think, as people get to know mining further, because certainly the sort of understanding by capital, specialist capital and big pension funds, private capital requires a bit of time, but certainly we're seeing quite a lot of that. I think what required is experts like this group really managing and shepherding, I think, that capital, because when you talk about new materials, new technology, EV, I would say there's still a lot of lack of transparency and perhaps lack of knowledge around which of those niche metals will ultimately play out. I think for us, as I think we talked about quite a bit on this panel, copper is one that is very prominent, very well known, and cuts across many, many different things. So big liquid market, good area. But we do see, Leo, that certainly the move and interest in mining metals are surging quite a bit.
Warren, how are your conversations going with the institutions?
They, Leo, are a tremendous disappointment. They just don't get it. And they really don't get it in the context of the current environment of a wall of free money. They'd much rather buy a concept that trades at 100 times revenue, if there is revenue, than a century-old, highly successful mining company that trades at 4 times EBITDA. You can buy the entire global uranium industry for $10 billion. That's about an hour's worth of trading on QuantumScape. And yet one is a concept, the other keeps the lights on for half the lights on planet Earth. It is a complete and utter misallocation of capital. I am confident that in my lifetime, certainly in my child's lifetime, that mining companies will trade at 40 times EBITDA, not at 4. So we've got a 10-fold increase yet to come. But institutions today don't get it.
So plenty of time for the smart money to get on board the train, I guess.
This is a generational opportunity for us as good parents to invest, and maybe we will be laughed at and scorned, but we will invest in the Rust Belt sunset industry that is mining. And our kids and our grandkids will inherit the benefit of our persistence and genius.
That's a strong message to finish this up. John, any thoughts? Can you top that?
Sure. Look, absolutely, Warren, agree. The ratio of the Dow Jones to the commodities index is at all-time lows, and partly that is driven by a lot of money going into the FANG stocks and driving them up to spectacular highs. But there is evidence of, as Jason said, there is evidence of some generalist funds now looking at the mining sector. Last year, for example, one of the bigger funds out of the US, I think it was the Detroit Fire and Pension Fund or something like that, said it was going to allocate 5% of its funds to gold. So a trickle is starting to come in, and from my personal perspective, it used to be that companies that came to visit Melbourne and promote their junior projects, our little fund was pretty much the only game in town, and they didn't have anyone else to see here. Now, those same companies are raising equity in oversubscribed placements, and you're lucky if you get a phone call.
Mm-hmm. Well, I mean, it's all very encouraging, really. I mean, there's not much more we can say about that. Thank you very much to all of our panelists for sharing their expertise today. Thank you very much to our audience for lots of interesting questions there. Our next panel is going to be on decarbonisation. We've touched on it a little bit today. We'll be going deeper into the subject of decarbonisation in a couple of weeks' time after Chinese New Year. So look out for the email announcing the time and date of that, and you'll be able to register again. Just a final reminder to those of you in the audience here, the meeting planner for our one-to-one mining investment APAC event has just goes live today. You'll be receiving your logins shortly in your inbox. Please do log in and start making meetings with the 75 companies we have in the system there for you. If you haven't registered and you're an investor and you'd like to have some meetings with the management teams of these companies, please do go to our website to register, One-to-One Mining Investment APAC. Type it into Google and let the search engine do the rest for you. But thank you very much, everyone, for joining us today. We look forward to seeing you at a webinar very, very soon. Thank you very much, guys.